Good day, Industrial Advisors listeners, and thank you for tuning in. If you have not subscribed, please do so by clicking subscribe wherever you podcast. Click the like button and hit the bell if you want notifications of when we put up new content. Leave us a comment about anything we discuss here today or general comments about the show. Now, let's get into it.
All right, welcome to our Industrial Advisors podcast with we have Bill Condon, with Matt McGregor, and our guest today is Jim Eckert, who's the Director of Corporate Real Estate for Owens Corning. We are live at IAMC here in Detroit. Jim, tell us how you ended up being the Director of Corporate Real Estate there.
Like most of us, we all end up here somewhat by accident, but I am an engineer by background and training, civil engineer, and I spent 10 years of my career doing capital delivery kind of work. So building industrial plants, facilities, and modifying them and so forth. And I ended up morphing over into a facility management role, and then did that for a few years, ended up doing some major development project as well associated with that role. And then started working in the real estate aspect of our business, and I've been doing that for the last 25 years.
Wow, 25 years.
Yeah.
Time flies, huh?
So
It does.
Back up a little bit so the listeners know who you are. Tell us, where did you grow up, and maybe what was the first car you ever bought?
Oh, wow. Well, I grew up in Youngstown, Ohio. Now I'm going to show my age here. So my first car was a 1963 Dodge Dart
Sweet.
that I bought for my brother.
Okay.
And it ended up to be the biggest lemon I ever had.
Two-door or four-door?
It was a two-door.
Two-door, okay.
It had a 318 8-cylinder engine in it.
Mopar.
Yeah, Mopar.
Youngstown, that's quite a football town. If I,
It is.
Yeah,
And
yeah.
still is.
Yeah, of
still
course,
is. We
yeah.
won yesterday.
yeah,
Yeah.
love it.
So good. So, Jim, tell us a little bit about why you are a member of IAMC. How long and what are the benefits? Why do you come here?
I've been involved with IMC probably for about 15 years or so,
Right.
quite a long time. It is, as you may know, it's the preeminent place for industrial real estate executives and professionals. I think there's probably three aspects to it. Learning and professional development is a big part of it. Networking is obviously a part of it because in this business, who you know is very important. And I think just kind of seeing other aspects, because so many of us come from different areas into this business, everybody comes in with a different tool set. And it's kind of nice to be able to connect with others and see how they approach their business and how it might improve what you do.
Yeah, great answers. So speaking of business, it's been about a year since I met you last year in Fort Lauderdale at the conference. A lot has changed over the past 12 months. What's the biggest change in your business over the past 12 months?
Well, 12 months, 3 years, ever since the pandemic hit. As you know, industrial real estate's been on fire.
Yeah.
For sure.
And we've gone from speed to light speed, I think, in this industry, which has placed new demands on us in our industry. It has, having said that, so ratchet it up and then layer on top of the fact that we were all locked down and we couldn't travel. We sometimes couldn't have face-to-face meetings. So we were forced into a whole new way of doing business, and that was remotely and through electronic means. I think a whole lot of good came out of that because I think there's a lot of efficiencies that came out of that. Less travel, more time to work in collaboration with our business partners and with our customers. So I think that's been a good thing.
Yeah.
And coming off of that, tell us, right now, the two most dynamic things in a good way that are impacting Owens Corning.
Well, again, since the pandemic hit, our business has skyrocketed, oddly enough.
Just because everybody's improving their houses or
Yeah,
new construction,
we're-
both?
We have a number of businesses. We're in the construction materials business, we're in the roofing materials business, and we're in composites. And all three of those segments are doing very well. Housing market has been on fire. I think it's going to be slowing down now with what's going on with interest rates.
Sure.
we're actually not seeing that slowdown yet. We're still seeing a pretty robust new construction market. So
That's interesting that you haven't seen a slowdown.
yeah, I think we've got our eyes on it and trying to watch what's going to happen. But as we see right now, tempering maybe, but really trying to understand how long that's going to last and how to react to it with our business. But it's really it's been great for our business. Our business has grown significantly across the last 3 years. So
Yeah,
excellent.
that's great that the business hasn't slowed. How has your portfolio been impacted? With your portfolio that you manage by inflation and interest rates and where the economy is currently at?
well, it's worth more.
Yeah.
Also costs more.
Yeah.
Yeah.
So, the interesting thing about it is for us as real estate professionals, I think what's happened as a little bit of a side to this is that because our portfolios are worth more, there's more on the balance sheet because on the P&L side, we're showing more cost. We're getting more attention by our senior leadership in our firm. So it's that's good and bad. And, it's actually good. It's great. But at the same time, I think it's because of what's going on with the supply chain and the difficulties in getting things accomplished on the timeline we had and the availability of properties, not being able to get properties like we once did. We used to be able to do things on a very short-term basis. Now we're having to plan out and really devote a lot more time to get to where we need to go. It's causing us to be in the business closer. We need to really be better business partners. We need to get out ahead of business decisions, and that's sometimes difficult. And we find ourselves sometimes really kind of driving the conversation relative to, hey, we've got lease expirations coming up. Instead of talking about that a year and a half out, we're talking about 2.5 years out.
And what exact type of properties are you having a problem finding?
Warehouses certainly have been an issue.
In the major cities, tertiary markets, both, all of the above?
Pretty much everywhere.
Yeah.
And pretty much globally,
Right.
frankly.
Interesting.
Some markets, they don't exist at all.
Yep.
And historically, we've kind of worked on the basis because we've run pretty lean in terms of our warehouse. Let's talk about the finished goods side. We operate pretty lean. We don't like to have a lot of excess warehouse space and cost laying around. So we've been able historically to go out and get short-term space to be able to augment it when we see business cycles changing. Because it's sometimes very difficult to forecast increase or decrease in demand. So we've been able to be fairly flexible and kind of reactive in being able to add space. Not anymore.
Right.
That space isn't there anymore.
Yep.
So we're having to think differently about those strategies. We have to take longer-term positions in warehouses, and in many cases, we're looking at biting the bullet and really investing capital in building warehouse space where we would have leased it before.
So shifting to more of an ownership model.
Yeah, just so we can control the risk.
Absolutely.
Yeah.
Yeah. And just out of curiosity, like, how are you guys financing that? Just with the changes of interest rates, how is that coming into play?
Well, our business fortunately raises a lot of cash.
Yep.
But there's a lot of competition for that cash inside the business. So we have the resources to be able to expand. It's just a matter, is this the right kind of investment to make? And so we still have those hard conversations around investing in warehouses. We haven't really liked to invest in real estate. We really like to invest in process equipment because we make more money on it.
Absolutely.
Yeah. Your business. Yeah.
So the new year's, a couple months away, and obviously we're, coming out of COVID here. What is your predictions for your company in 2023? What's going to impact?
Really difficult. Who can predict what's going to go?
Right. It's been hard to predict things.
From what I see so far, it's kind of let's watch this and start making preparations on both sides. I don't think we're, pulling the trigger really quick on anything. I think we're really trying to make some plans, say, okay, if demand remains high, how are we going to operate? Let's make sure we can satisfy. It's very important. Satisfy our customers. But if it falls off, what's our contingency plan? And when it comes to real estate, that's a big deal. Trying to forecast that and figure it out. Right now, I think our line of sight is, 2022 is going to be, we're going to finish strong. I think working into 2023 is going to continue to be strong. But, when you start getting out 12 months, it starts to get a little bit more questionable. And I'm not sure we have a crystal ball on this yet.
For sure.
Yeah. How are you guys? A lot of companies are having a challenge with labor right now. I'm assuming you guys are facing that same challenge.
Yeah, we are.
Yeah.
Yeah, pretty much everywhere. And I would say that's a challenge that we have in the industrial real estate segment too. I think that's some of why we're doing the work we're doing inside IAMC around professional development is that we need to reach out and attract people into this industry. We're no different than anybody else, whether it be people servicing warehouses or people operating our plants. We need to create a pipeline in this industry for new talent to come in. And we've invited some folks in from Michigan State this time because of the quality of the supply chain program to kind of audit and give us some insight as to what we might do to help engage younger people into the industry. So it applies to us as well. Very important.
I'm curious, and great question, Bill, on your labor. When you go into the real estate now, are you looking at that labor pool more dynamically than you ever have before for when you engage on site selection, which I know is challenging when there's no buildings, right?
Yeah.
But are you really looking at that more now?
Yeah, we are. We always have looked at it, right? It's always been a part of our site selection process, a big part of it. And so I think where we're struggling a little bit is not struggling, but I think what we've become more mindful of is keeping our leadership talent in place at these facilities. You can go into a place and you can find, it's a challenge to find good, qualified, skilled labor, certainly, but finding good management that's going to lead that plant and retaining them is very often a part of the location you select. And I even had some of our operations folks tell me, whatever you do, stay within 30 minutes major metropolitan area, because otherwise we can't retain people. They want the quality of life and they have options. So that's kind of a new dynamic, I think, that's come in where we really need to create the environment for people to want to be in those locations.
Yeah, and I think your point on retention is a good one as well, right? You hire good people and then you got to keep them, right? So I think the labor thing in 2023 is going to be an interesting one to watch.
Right.
Well, thank you, Jim. I know we got a busy agenda today, lots of breakouts, but really appreciate you coming on and spending some time with us, and really good job as well.
All right, thanks. I have a last prediction for you.
Oh, great.
Football related?
Here we go.
Buckeyes national championship this year.
All right. Yeah.
Hey, there's a sports book here. If you're really confident, you can lay it down.
By the way, when I showed up and realized there was a sports book here, I was really excited.
This changed Bill's entire week.
I might tell my wife I need to extend for a day or something. Yeah. Right. So thank you so much.
Thanks, guys. Appreciate it.
Thank you.